So for every chapter, I'll give you a 2 minutes introduction. What is this chapter all about? Okay, what is it they're trying to test you with this chapter? So you should have an approach for every chapter. Now in my classes, I used to give them one-line summary of the chapter. Okay. So the one-line summary of the chapter is like one sentence on like what is this chapter all about? What is this value of supply chapter all about? Now the government wants to ensure that GST is paid on a fair value. Like nobody should go and then say I'm selling some product. Nobody should go and then reduce the value so low that GST department would get very low GST because GST rate is applied on the value. So I wanted to ensure that the one who's supplying the goods will calculate the value as the fair value. Okay. So on what value GST is generally paid? The term that we use for valuation is called as transaction value. Not just for GST, any indirect taxes if you look at. Okay. If you look at if you look at all the indirect taxes, be customs or other taxes in the past, all the taxes, everything talks about the same thing, right? It says that value is nothing but transaction value. Say I'm selling the product. I'm selling the product for 10,000 rupees. On what value I should pay GST? 10,000 rupees. Value is nothing but transaction value. It's as simple as that, right? But in GST, government wants to ensure what value? The transaction value has to be a fair value. They don't want people to reduce this value. So they have kept the provision in such a way that if somebody is trying to reduce the value to reduce the GST, the government will have provisions to counter this to increase the value to the correct value. That's how the provision has been drafted. So what is section 15 says? You can look at it as an equation. Section 15 is the only section that you have for you to learn. Okay, it says value under section 15 is equal to, I put it as like an equation. It is transaction value under 15.1. What is it? Transaction value under section 15.1 plus items to be included in value under section 15.2 minus discount under section 15.3. So what is value? Value is transaction value. But they said, I want the transaction value to be a fair value. So to ensure that the value is a fair value, what they have done is they put a provision saying, I don't want to do this method of valuation. This method as in like I don't want you to take transaction value as the value in two conditions. Condition number one, when your supply is to a related person. Why they are saying that I cannot take this value when the supply is to a related person? They're saying that if at all you're supplying to a related person, then you will have this question, who's this related person? They said, don't worry, in explanation to the section 15 explanation, I will explain you what is a related person. So they have given you a list of persons who will be related person. Employer, employee, officer or directors in each other's business, legally their partners, family members, sole distributor, holding company, subsidiary company. If a third party is controlling two of the companies, one party is controlling two companies, and third party is holding more than 25% in both companies. Likewise, they have given 9 set of related person, which you will find it in your ICA material in the definition part, who's a related person. So if at all you're a related person, they're talking about a possibility. Say, if you're supplying to a related person, there's a possibility that you and him can have influence on the value. So if I take the value as the transaction value, then you might have done the transaction, 10,000 product, no, to your brother who's fully dependent on you, or to your children, you might sell it for a lower price. So I don't want that. So they said, if at all the supplies to related person, take market value. Okay, you cannot take transaction value. I would have sold the product at 5,000, but the market value of the product is 10,000. So you have to pay GST on 10,000 if you're supplying to a related person. There's a provision like that is given in GST. Now, where it is given as it is market value? Where it is given as it is market value? It is given as it is market value in valuation rules. Okay. Now, this valuation rules is there only for CA final. The only thing that you have to learn at your level is what? Don't take the transaction value when it is between related person. Are you guys understanding? Okay. Second case, when it is an exchange. Say, I'm going to a shop and then I'm giving a mobile phone. an old mobile phone, and I'm saying that I want a new mobile phone. If you go to Amazon today, you can do exchange of mobile phones. And when you do an exchange, say I'm buying a 10,000 worth of mobile phone, but I'm only paying 7,000. Why? I gave 7,000 and a 3,000 worth old phone. This is a case of an exchange. There also don't take 7,000 as the value, because the value of this particular mobile phone is how much? It is 10,000. They say take the market value. These two cases are the cases where we will not take what? Transaction value. In all other cases, so you can see here, you will do this method. So you can see the formula that I've given. This formula is taken only if the following conditions are satisfied. What are the conditions? Supply is not between related person and price is the sole consideration for supply. Are you guys understanding? What do you mean by price is the sole consideration? Only consideration, which means what? It is not a case of a exchange. So if it's an exchange, if it's a related person, don't take transaction value. All other cases will take transaction value. Are you guys understanding? Now, if it is a related person or exchange, what kind of valuation we will do? Valuation rules, that is there for final. Now look at transaction value itself sometimes will not represent the correct value. Why? People might collect in different order. Say for example, okay, so I am selling a mobile phone. Okay, I'm selling a mobile phone to suppose I'm selling a mobile phone to one of you. The mobile phone price happened to be 10,000 rupees. To reduce the value, what I said, I told you guys that I'll sell the mobile phone 5,000. Okay, in the bill I will give you 5,000. 5,000 you give it as interest later. You pay after 1 week and then you pay it as an interest. So in my box, how much came? 5,000 when I sold the mobile phone to you. 5,000 I got it as an interest because you delayed the payment for 1 week. Hey, 1 week is not a delay, but still I'm creating a transaction like that. So I'm getting 10,000 rupees in my cash box, but value is only how much? 5,000, because invoice is only having 5,000. So this kind of splitting of value will be a very common scenario. Even if I take transaction value as value, sometimes people will split and collect something. So what they have done, they said value should be transaction value under section 15.1 plus items to be included under section 15.2. So 15.2 has 5 amounts that they have given, wherein they are saying that these 5 amounts, if you split and collect as something else, you should add it back to the value. So how the question would come? In the examination question, they will tell you transaction value. They generally use the term for transaction value. Listen to me carefully. The term they generally use for transaction value is price. Price of the machinery, price of the product. Sometimes they'll use the word list price. So in a question, if you find, okay, list price of this product is, or price of this product is, then it means what? They have given you the transaction value. Then they would say, apart from this, from the customer, the seller has collected this amount, this amount, this amount. What you should do this with extra amount that they have collected? You should check whether these amounts are mentioned in 15.2. If it is mentioned in 15.2, what you should do? You should add it back to the value. Then, if you've given a genuine discount, what you should do? Reduce that discount from the value. This is how you will do the value of supply computation. Are you guys understanding? Okay. Now, what is this? This entire chapter is only learning 3 subsections. What are the subsections you will have to learn? 15.1, 15.2, 15.3. Done. Shall we go down and then learn 15.1, 2, 3 and finish this chapter for this session? Can I do that? Okay. 15.1. What you should do is that for the examination, you should remember these wordings so that you can write working notes. How 15.1 transaction value is defined? They said transaction value is nothing but, what is the term that I told you to understand transaction value? I told you 2 terms in the question you can understand value with. What is it? Price and list price. You remember? So the same definition only they have given. What is it? Transaction value is price paid or payable for the supply. Transaction value is price paid or payable for the supply. But I have written a note. Let's read the note and then try to understand what it means. Notional amounts which are waived and not payable need not to be added to the value. Notional amounts which are waived and not payable need not to be added to the value. Okay. What do you mean by notional amount? Notional amount can be associated as waived and not payable. Okay, I'll give you a simple example for that matter. Okay, say I'm selling a mobile phone, right? Okay, so I'm selling a mobile phone. While selling this particular mobile phone, there is this speaker set. Okay. Generally put together, I charge 80,000 rupees for this. mobile phone, an iPhone and an airport put together some 80,000 rupees as an offer. Okay, suppose there is Tamil Puttand offer. Okay, so coming in this month, right? So we have this offer coming in. Therein, wherein I said, normally I charge 80,000, but this time I'm giving an offer. I will only charge 70,000, but only for the phone. Okay, so if you buy the phone, this 10,000 rupees I otherwise charge will be waived. My question is, what will be the transaction value of this particular product? Will it be 80,000, 70,000 plus 10,000, or amount I charged? I'm charging only how much? 70,000. How much will be the value? Only 70,000. Why? This amount, which otherwise I used to collect, what did I decide to do? Is the customer required to pay this or not need to pay this? No need to pay this. So if it is not payable, will I add it to the value? No. The same concept can also be understood as a discount. Sometimes I would use the word it is waived and not collected. I might not use the word discount. It is waived. The moment I use the word waived, I should quote what? Transaction value. The moment I use the word discount, I should quote which section? 15.3. You guys understanding? So transaction value is the price. Now, if at all you have added something more, if you have collected something more from the customer and you are saying that is not part of value, you might have to include it back to the value. You can see a giant chart here. Like, I mean, I have included the entire thing that needs to be added to the value in one chart. This is 15 subsection 2. So if you don't have the time and effort to write it, what you should do next? Take a photo of this and then keep it with you so that you can look at this later. So you're sorted there. So if you guys want, I can also pause here. Done? Okay. All right. So let's look at what does this basically means, right? Let's start discussing this. So the overall understanding is very clear and very easy. It says that if at all, the supplier, the seller, collects these amounts from the customer, and the seller is arguing this is not to be included in value, but we will have to forcefully hand it back to the value. So their question preparation is very simple. They'll give you, out of these 5 items that you can see, some of the items they'll give you, and they will ask you to compute what is the value. So you'll have to consciously decide which section is asking what to be added, what not to be added, and then add it back to the value. That's all you'll have to do. Okay, so let's look at first. I will tell you each of them. As and when I tell you each of them, if you want quickly, you can scribble the examples, because the examples are going to be super important for you. Okay, so first they're saying, I'll read it and I'll tell you what is there for the exam. That's what our approach is, right? They're saying clause A of which section? 15 subsection 2 clause A. And it says what? Taxes, duty, cess and fees and charges levied under any law other than GST and GST compensation cess, if charged separately by supplier from the recipient, will be added to the value. What is the meaning of this? Taxes other than. So the first segment that you can see here, can be understood as taxes. It could be called as tax, duty, cess, fees, whatever. So any law would have some other taxes other than what? Other than GST and GST compensation cess. So the taxes mentioned in GST, apart from that, if you collect any other taxes from the customer, you should add that value first to, you should add that taxes first to the value, then apply GST. This is like an, I generally call 15.2a in a funny name. I would call this as acceptable double taxation. Because what is that they're saying? Any tax other than GST will be added to the value, then you will apply GST, which means that GST is applied on the other tax, which is double taxation. But there are product where government says that no, I want these taxes anyway. So accepted double taxation with section 15.2a. Shall we look at the examples of this? There are 3 examples generally they tested in your exam. I'll show you the workout batch notes so that you can easily understand this. Three examples. Example number one is entertainment taxes. Example number one is entertainment taxes. Now, if you look at entertainment taxes, not the entire entertainment taxes are gone today. Even after introducing GST, we still have entertainment taxes levied by local authority. To give you a classic example, today if you go to Chepauk Stadium and start watching CSK match, CSK versus RCB, I'm crying already. Okay, anyway, so if you start watching the match, you will end up paying two taxes. What are the two taxes? Entertainment taxes, which is paid to Chennai Municipal Corporation, plus GST paid to both state government and central government. See, GST is GST. Are you guys understanding? Then I have given you an example for that matter. How do you compute the ticket value? How will you compute the GST? How will you compute the entertainment taxes? Look at this. Say, entry ticket to the cricket stadium is 800 rupees. Entertainment taxes would be, say, 25%, which is how much? 200 rupees. Then there is GST. How will you apply GST and compute MRP of the ticket? How will you compute MRP of the ticket? Whether we will add entertainment taxes first or GST first, or you add both entertainment taxes and GST on 800? No. 15(2)(a) says entertainment taxes, if it is applicable on a particular activity like entry ticket or a music show or a theater, you should add this entertainment taxes to the value first. So 800 ticket, 200 entertainment taxes. So 1000 rupees will be the value for the purpose of GST. So you will apply GST 18% on 1000 rupees. At what price you and I will purchase this ticket then? 1000 plus 18%, 1000 plus 180, 1180 would be the value. Which means what? You are paying GST even on the entertainment taxes. 15(2)(a) says that any tax other than GST should be added to the value. Are you understanding this? Is it clear? Is it clear? Thumbs up, everyone. Right. Then, second product. Yeah. Second product. If you look at excise duty on tobacco and tobacco product has the same understanding. So there's something special about all these products. Like entertainment taxes by local authority was not merged under GST. So which means after introducing GST, local authority were levying entertainment taxes even then. Likewise, I can tell you that for tobacco and tobacco product, there is something special. You can see it on the screen. I can read it for you so that you read it slowly. Don't rush, read it slowly. Excise duty on tobacco and tobacco product, I have written there. Both excise duty and GST is applicable on tobacco and tobacco product. There is a special act which levies excise duty on tobacco, which was not withdrawn even after introducing GST, which means that if somebody is going purchasing tobacco and tobacco product, how many taxes are applicable today? One tax or two taxes? Two taxes are applicable. What are those two taxes? One is excise duty, another one is GST. Then how will you compute MRP of this particular product is the next question that we have. That is what I have written as an example here. Say you know this company called ITC, which manufactures tobacco also. Suppose, I'm taking an example. Suppose ITC is manufacturing tobacco product 100 gram priced at 1000 rupees. First, they have to pay what taxes? Excise duty or GST? They have to pay excise duty. Let's assume I have written excise duty, the percentage of excise duty I have written for that matter as 10%. You can see it on the screen, 10%. So 1000 rupees will be paid as excise duty to the central government. Then I have to levy GST and GST compensation cess. So for example, I have taken the rate. So look at the rate that I have taken. I have taken GST to be 28% and cess, GST compensation cess. This money is collected by central government and used only to compensate the states for the loss of revenue. And now it is being used for repaying the loans that is taken for compensating the state. So while introducing GST, for 5 years, any loss of revenue state has, who will compensate? Central government used to compensate. To compensate, central government was collecting on some product an additional tax called as GST compensation cess. That is what is the meaning of cess. And this cess is very different from other cess. Don't confuse yourself. In income tax, cess is computed on what value? It is computed on income tax. But in GST, cess is another GST only. I will repeat that sentence once again. Don't get confused. If there is GST of 18% and there is a cess of 10%. What is the meaning? GST is how much percentage? 28%. Cess is another GST. That's our understanding. But this cess amount can only be used for what purpose? Will the cess be distributed between central government and state government? No. GST compensation cess will be collected by central government. It can only be used for compensating the state for the loss of revenue. That's the only difference. So for tobacco, you have GST and compensation cess. So first, ITC has manufactured 100 grams of tobacco for how much value? 10,000 rupees. First, what tax is levied? Excise duty. At what percentage? 10%, 1,000 rupees. Now I have to levy GST of 28%. Question is this: will I levy GST of 28% on 10,000 or 11,000? 10,000 or 11,000? It will be on 11,000. Why? Because this excise duty will come under which section? Taxes other than GST, which is 15(2)(a). So that will be added to the value. So on 11,000, I apply 28%. Take your calculator. I want your tuck and compute the numbers. What is the amount that you will get? 11,000 multiplied with 28% will get you how much amount? 3,080. Is it correct? Is it correct? The amount is correct? Yes. Then you have to levy cess. Cess is levied at 20%. You tell me this 20% is levied on what value? It is levied on the same value on which GST is levied, which is again what amount? 11,000 rupees. So another 11,000 into 20%, which will be how much? 2,200 rupees. It is not on GST. It is not on value including GST also. You guys understanding? Are you understanding the structure? So the MRP of the product would be how much? It will be 16,280 rupees. So which will include what? Excise duty, then GST and cess. This is how you will compute. So they can ask you a question on excise duty on tobacco itself. They will create an practical question where they will say that, okay, ITC selling tobacco. This understanding is what is important for you. Is it clear? Can I have a thumbs up? Can we go to the third example? Right. So the third example is generally municipal taxes. There are still building rental municipal taxes and all is being levied. So sometimes municipal tax is also being tested in the examination as a tax other than GST. Right? So three examples, generally only these three things are tested. So when I say taxes other than GST should be added to the value, you should remember that entertainment taxes by local authority, tobacco excise duty or municipal taxes. If it's there in the question, what you should do? If it is collected from the customer, you should add it back to the value. Very simple. Let's move to the next. There is one clarification that we have there. What does this clarification says? Let's read this clarification. It's an important one. They can test you in the exam because your income tax has TCS. So it's something talking about something on income tax TCS. What it says? Circular says, TCS under Income Tax Act 1961 does not have the characteristics of tax mentioned above. Hence, it is not included in value. Normally, what 15(2)(a) says, it says that taxes other than GST should be added to the value. But what tax needs not to be added? TCS under Income Tax Act need not to be added. That is not the tax they are talking about here, because TCS under Income Tax Act is not the taxes on a particular product. One quick example to get this understanding correct. You must have already learned TCS on income tax. Even if you have not learned it, no worries, I'll explain you what is this particular example all about. So there is an income tax provision which says that if anybody is purchasing a motor vehicle which has, if anybody is purchasing a motor vehicle which has a price of, which has an ex-showroom price of how much amount? More than 10 lakh rupees. Okay. So if it is exceeding 10 lakh rupees, then the dealer will have to collect additionally how much percentage TCS from the customer? 1%. This TCS is not GST TCS, is what TCS? Income tax TCS. Okay, now look at this example, you will understand this. Say, this is dealership called as Perfect Honda. Okay, they sell Honda vehicles. Honda has this vehicle called as Honda City. Okay. Perfect Honda is selling Honda City to Mr. Raju. I have given the ex-showroom price of Honda City. Value of the car happened to be 12 lakh. GST and cess put together, it is 18 lakh 36,000. Will TCS under Income Tax Act will be applicable here or not applicable? Applicable or not applicable? Applicable, because the value exceeds 10 lakh rupees, right? So 18 lakh 36,000 plus 1% should be collected by this Perfect Honda dealership. So they collected 1% on 18 lakh 36,000, which is 18,360 rupees, just 1%, right? So how much amount will be collected by this Honda dealership from Mr. Raju, the customer? 18 lakh 36,000 plus 18,360 makes it 18 lakh 54,360 rupees. Now they collected TCS of 18,360. Next question would be 15 to A says what? Taxes other than GST should be added to the value. So the next question we ask is, should this 18,360 should be added to the value? Should I levy GST on top of this also? The answer is no. The clarification says that is not required. The question we were answering is TCS under IT Act the tax mentioned under 15(2)(a? The answer is no. Why? The circular clarifies that TCS under Income Tax Act need not to be included in value. Why? Because this TCS after collecting, Perfect Honda will do what? Deposit this 18,360 to the PAN number of Mr. Raju. If Raju does not have enough income tax income, then Raju can take the refund of this 18,360. Are you guys understanding? So they said this has nothing to do with the car. This is not a tax on car. This is a tax on the income of Raju. And government is assuming that since Raju is buying a high value car, he might have some income. So I wanted to collect some income through this model. Are you guys understanding? So what taxes we will add generally? Taxes on the supply. And this is not the taxes on the supply. That's why it says it does not have the characteristics of taxes mentioned above. Is it clear? Is it clear? Okay. Next, move to the next understanding. So 15(2)(b, what it says. What is the next thing that need to be added to the value? I have written one sentence into point by point because I wanted you to remember this point by point. Direct third party payment by recipient on behalf of supplier in relation to supply will be added to the value of supply. Who's making this third party payment? Recipient. Recipient normally pays money to the supplier. Okay, I'm purchasing a mobile phone from say Sangeeta Mobiles or MyG Mobiles. I'll go and then pay this money to MyG Mobiles, Sangeeta Mobiles. Instead, they told me to pay a portion of this to third party. Then that amount will be added back to this value. Provided this payment, so let's read this sentence once again. It's a direct third party payment by recipient on behalf of supplier in relation to the supply. It should be on behalf of supplier, it should be in relation to supply, will be added to the value. If you look at an example for that matter, this examples that I am showing you here is already there in the tax school free resources. This is what I said. You can see example notes May 25. You click on that, you will find it chapter wise. You can just go and then see that there. Okay, later if you want some confusion, you look at that. But I can still show you one example for that. Look at this simple example that I've taken so that you refer the same example in the PDF. Say Radha is a businesswoman. Radha wants to buy a machine from Caterpillar company. Now Radha wants to purchase a certified machine. Now Caterpillar company sells the certified machine for 1,10,000 rupees. And what is the objective of Caterpillar company? They want to reduce the value. To reduce the value, what Caterpillar company plan is, Caterpillar company told Radha, like, do one thing, I have to anyway get it certified from a third party. So there is this engineer, chartered engineer I've written here, he's going to do the certification. So normally what Caterpillar do is that, Caterpillar will collect 1,10,000. Avail the service of this engineer who's an unregistered person. Huh? He does not have GST number, there's no GST, he charges. So Caterpillar will collect 1,10,000 plus GST, pays 10,000 to Caterpillar, to the engineer. An engineer will do the certification for Caterpillar. After certification, Caterpillar will sell the machine to Radha. This is the normal model. Now Caterpillar is thinking little too much. They're saying, how can I reduce the value and reduce the GST? So Caterpillar found out a method. Method is this. Caterpillar told Radha, Radha, you pay 1 lakh to me. I'll give you a bill 1 lakh plus GST to you. Anyway, I have to pay 10,000 rupees to this engineer to do the certification. You do one thing. You directly pay this 10,000. I will exclude this from the value. Can I do like this? Can I reduce the value like this? Yes or no? You cannot do this. Why? Because this amount, even if Radha pays directly to the chartered engineer, will come under 15(2)(b). What is 15(2)(b) says? It's a direct third party payment. Who's making this payment? The recipient. Direct third party payment by recipient on behalf of supplier, on behalf of Caterpillar, in relation to the supply. Even if it is directly paid by Radha, what will be the value of supply for Caterpillar? It will be 1,10,000. It has to be added to the value. So in examination question, what they'll say that they'll give you multiple expenses that needs to be incurred by the supplier. They'll say this money is directly paid by the customer. What you should do? Add it back to the value. That is what is the understanding of it. Now the same example, if I slightly modify, your answer would be different. Okay, I'm changing the story a bit. Caterpillar said, do one thing, Radha, I will only give you the machine. You directly go to the engineer, I can give you his number, have a separate contract and get it certified. In that cases, what will be the value? Only 1 lakh. Why? In this case, this payment is not on behalf of supplier. So each of the wordings that we have is important. If there is a direct contract between customer and the third party, would that be added back to the value? No. When will I add it? When the payment is made by the recipient on behalf of supplier in relation to supply, then only I will add it to the value. Is it clear to all of you? Then, clause C talks about, clause C is something that is frequently tested in the examination. They'll give you something or the other to get your understanding. It talks about incidental expenses incurred by supplier in relation to supply at the time or before the goods are ready for delivery or supply of services and charged by supplier to recipient. Let's read the wordings. Full focus on, you're looking at the wording and then reading it as one sentence. Incidental expense, that's the term that we are using for clause C. 15(2)(c), incidental expenses. Who's spending this? Incurred by supplier. Supplier is spending some money. For what? In relation to the supply. It could be a packing charge, inspection charge, commission, something. When at the time or before the goods are ready for delivery or supply of service and charged by supplier to the recipient. This amount is separately collected by the supplier from the customer. Say I am selling a mobile phone. Mobile phone has a beautiful cover. What I have done? This cover I am separately charging from you an extra amount. And I am giving it in the bill. Mobile phone 80,000, cover happened to be, the box in which I gave you the mobile phone happened to be 2,000. What will be the value? It will be 82,000 itself. They're saying this cover would be considered to be an incidental expense. Packing charges would be an incidental expenses that is incurred in relation to the supply. And finally, I got this from the customer will be added to the value. What are the incidental expenses that generally tested in the exam? This example is very important for you. Let's look at the structure. This is something that you might want to take a photo and then keep. In the examination, that generally ask around 8. I have listed, there could be more than this, but I have listed like 8 different list of incidental expenses. If you find any of this, add it to the value is what I would tell you. Packing charges, testing charges, inspection charges, installation charges, weighment charges, warranty, additional warranty charges, sales commission, cost of instruments specially purchased for the supply. All these amounts are included in value. if collected from the recipient. So a quick photo would be better because we might have to move ahead, right? So packing charges, testing charges, we know what it is, inspection charges, installation charges, weighment charges. Weighment charges like this. I'll give you an example to get the context. Say, I'm selling you a wholesale steel. I'm delivering you like say 4,000, 5,000 steel. 4,000, 5,000 kg of steel. Now, you don't know whether my computation of 4,000, 5,000 kg of steel is correct or not. Right? You don't know whether I'm computing this 5,000 kg correct. So what I'll do, as a supplier, I'll ask you, do you want a certificate on the weight? So what I'll do, I'll send this vehicle to check the weight first. And the third party will certify saying, okay, there is 5,000 kg. And I'll pay the third party 1,000 rupees. This 1,000 rupees, I'll finally get it from whom? From the customer. So this 1,000 rupees also, say I sold steel for 10 lakh rupees. And I incurred another 1,000 rupees for checking the weight, and I collected this 1,000 rupees additionally from the customer. Right? So this 1,000 rupees also will be added to the value. Are you guys understanding this? So any of these incidental expenses, when will you add it? The word I have written here is also very important for you. All these amounts are included in value if collected from the recipient. You guys understanding? It will be added to the value if it is collected from the recipient. Finally, if they get it from the recipient, you will add it to the value. I'll give you a small example. So look at this example. Say there is this company which is selling, say, idli dosa batter. This is famous company called ID Fresh. Now, what ID Fresh is doing is that they decided to outsource their entire packaging. So this ID Fresh, the company number one, which is ID Fresh, they have their own subsidiary which is doing packaging. ID Fresh will make idli dosa batter, send it to this packaging company. They do each packaging for 10 rupees. 2 liter of idli dosa batter, ID Fresh is pricing it at 100 rupees. This packaging company charges 10 rupees. Finally, customer is buying it for 110. Now, ID Fresh is saying, no, my value of idli dosa batter is only 100. 10 rupees is just packing charges I collect from the customer, pay to this third party company. Will their argument be correct or incorrect? Incorrect. Because this 10 rupees paid by ID Fresh, which is a idli dosa batter company, to a packaging agency would be considered as what expense? Incidental expense. Now let's look at incidental expense wordings and whether it will match. What will be added to the value? Incidental expenses incurred by the supplier. Who incurs his packing charges? ID Fresh, the supplier. So incurred by supplier is tick. In relation to supply, is it in relation to supply of idli dosa batter? Yes, that is also tick. Finally, did you get it from the customer? Yes. Then it will be included in the value of idli dosa batter. You cannot separate it. Are you guys understanding? This is what is the meaning of incidental expense. So all the listed expenses, if the supplier is getting from the customer, you would add it to the value. Next, let's move to clause D. Clause D is important. You have to have full understanding of it. Clause D talks about interest, late fee, penalty for delayed payment of consideration to be added to the value. Interest, late fee, penalty for delayed payment of consideration should be added to the value. There are two things that you can additionally understand here. One is, I have written two notes. You have to club this interest into time of supply provision also. So somehow examiners favorite area is 15(2)(d). They ask occasionally in the examination question 15(2)(d). Interest, late fee, penalty for delayed payment of consideration to be added to the value, and two notes. Note number one, such interest, late fee, penalty will have a separate time of supply under section 12(6) and 13(6). What is this time of supply for interest, late fee, penalty? Says time of supply for such enhanced consideration. They've used the word enhanced consideration. Would be date of payment of interest, late fee, penalty. Number two, it is generally assumed that such interest, late fee, penalty are inclusive of GST. They are inclusive of GST. That's an assumption that we make. All right. Let's look at this with an example so you will understand this little easy. So three things you have to club. One is 15.2D. You club it with 12.6 or 13.6 in time of supply. You will also club it with one assumption that you have to commonly make. This is a common example that I would have given in the PDF that is there on the tax school. So I'll just explain it from there itself. There are two companies. One is a wholesaler, another is a retailer. The wholesaler is a company called Xiaomi is the wholesaler. They are selling product to MyG, which is a retailer. They delivered and invoiced the product of mobile phone. They gave a package of mobile phones, say maybe 10 mobile phones or 20 mobile phones in a box. They gave it to MyG. They gave it on 10th January of 2022. Normally, when goods are delivered and invoiced on same date, whenever you hear this term called delivered and invoiced, the next thing that you should remember in your head is that the time of supply for a transaction would be the date on which it is delivered and invoiced. I will explain it once again with a basic understanding. Normally, when Xiaomi delivers and give the bill on 10th January, the time of supply for that transaction also happened to be 10th January. So when should Xiaomi pay this amount to the government? On or before 20th of February. This is how the normal transaction would work. In this bill, how much is the GST? 90,000. That needs to be paid by Xiaomi on or before 20th of February to the government. That will be the outward tax liability computation. Then, here what happened is that Xiaomi has given a sales term. I have written the sales term here. They said if the payment is not made within 3 months, there is an interest of 5,000 per month that is payable or part. So if there is any delay beyond 3 months, so how much time MyG can take to make this payment to the Xiaomi or wholesaler? 3 months. Any time they take beyond 3 months, they have to pay 5,000 per month or part as an interest. I have given you the date on which they made payment also. MyG made payment to Xiaomi on 5th of August. So when was the invoice date? 10th January. Is there a delay beyond 3 months? Yes. 10th January means 10th Feb, 10th March, 10th April should have been the 3 months. They made payment only by 5th of August. So how many months of delay is there? 1, 2, 3, 4. How many months of delay? So 10th April, after that I have to compute the delay. 10th April, 10th May, 1 month. 10th June, 10th July, 5th August would be 4 months. Right? Because part of a month also I have to pay an interest of 5,000. So when MyG is making payment to Xiaomi, MyG has to pay how much amount? 5,90,000 plus 20,000 interest. Understanding? Question is this. Now Xiaomi is getting 20,000 extra. Should this 20,000 be included in value? Should this 20,000 be included in value? The answer is yes. So I have written it as a question. Question number 1. Whether MyG is liable to pay interest? Yes, for 20,000. Is the interest of 20,000 subject to GST? Yes, this is what is given in 15.2D. It needs to be included. Then, can I keep this? So Xiaomi has to pay GST on 20,000. Can I ask Xiaomi to pay GST on 20,000 based on January month time of supply? No, because in January month there was no interest only. So normal, when they gave the bill of 5 lakh, their GST liability is only 90,000. Now they have to pay additional GST on 20,000. The time of supply for that 20,000 will not be 10th of January. That is a separate time of supply. What is that time of supply for us to compute GST on 20,000? That is what is given in this note. Let's read the note once again. What it says. Such interest, late fee, penalty, etc. will have a separate time of supply under section 12.6 and 13.6. What is the time of supply that they have given? The time of supply would be date of payment of interest, late fee, penalty. In our example, can you tell me what will be the time of supply for this 20,000 GST to be paid by Xiaomi? In that example, how much will be the time of supply? It will be the date of payment of this interest. When did they pay this interest? They paid this interest on 5th of August. So Xiaomi will have to pay GST considering 5th of August as the time of supply. Now, if you look at 5th of August as the time of supply, you will understand that your due date of paying this to the government would be next month 20th, which means 20th of September. That is fair only. Xiaomi can pay GST on 20,000 on 20th of September. So look at it. What is the time of supply for interest? I should apply 12.6. 12.6 would be the section that I will apply for time of supply for interest. For goods, if it is service, it will be 13.6. Time of supply, we can have a separate discussion, but understand I'm peripherally adding an additional provision. Time of supply would be date of payment of interest, that is 5th August. So they have to pay GST on or before 20th of September. Then look at the note number 2 that I have given here as an assumption. What is note number 2 says? What is note number 2 says? It is generally assumed that such interest, late fee, penalty are inclusive of GST. What is the meaning of this inclusive of GST? Will they pay GST on 20,000 as 20,000 into 18%? Yes or no? No. We should assume this 20,000 as including GST. So can you tell me what will be the formula for computation of GST here? What will be the formula? Value will be, okay, value and GST. How do you compute this? We should assume whatever interest you got is value plus GST. So if the value is 100%, GST is 18%, whatever you got 20,000 should be associated to 118%. So how will you compute value? Value is equal to the interest, late fee, penalty, that is 20,000 into 100 divided by 100 plus GST rate. In our example, the GST rate is 18%. So it will be 20,000 into 100 plus 20,000 into 100 divided by 100 plus GST rate, which is 118, which will give you how much amount in calculator. How much is that you are getting? Tuck, please. So you will get 20,000 into 100 divided by 118, 16,949. Okay. Then the GST would be 3,051. How did you get it? What will be the formula? Type your calculator. 20,000 multiply with 18 divided by 180 will give you how much? 3,051. Are you guys understanding? So what you're basically doing, you're splitting 20,000 into value and GST separately. Put together, it should be 20,000. That's called inclusive computation. Is it clear? Right. Now, think from the example perspective. So Xiaomi has to do what? Xiaomi has to pay GST on 5 lakh, which is the original invoice. The mobile phone value was how much? 5 lakh. 90,000 GST they will pay on or before 20th of February. No doubt. Right? Then on this 20,000, 3,051 GST would be paid on or before what date? Their time of supply is 5th of August, that will be 20th of September. So GST is generally paid. What is the due date of paying GST generally? Next month 20th. So initial 90,000 after 10th of January, 20th of February. For the 16,949 and 3,051, 5th of August is the time of supply, 20th of September would be the GST payment. So exam question generally test you this. Are you guys understanding this? Is it clear? Okay. I am going to touch upon one more additional thing, which is a document. Okay. So can you guys tell me on the chat box for all online people at least? Otherwise, you can tell with your mic, what document will be issued by Xiaomi to MyG for this interest? Can they issue another invoice? No, because invoice is already issued. Only when there is a supply you can issue invoice. So what document will be issued? It is debit note. Perfect. So the document that we would issue would be called as debit note. Right? So a debit note will be issued by Xiaomi of how much? 16,949 plus 3,051. What is a debit note? Debit note is a document that is issued when invoice is already issued. On the same supply where invoice is already given, I want to increase the value or increase the taxes, I would issue a document called as debit note. So here, when you are learning, interest, you should also learn a document called as debit note. So always learn procedure together with the main topic. So the moment you think about interest on delayed payment of consideration, you add it with debit note. So there's a question that was asked by Suresh on the chat box. I'll just read that question. So if you're not able to see, he's asking if we have prior agreement wherein Xiaomi and MyG saying, MyG, I will charge 5,000 plus GST as interest. Okay. What is our assumption? It is inclusive, right? What if they specifically have an agreement wherein Xiaomi is telling Maiji, hey Maiji, I'll collect plus interest only, plus GST only on the interest. It is not going to be like inclusive. I want extra because I will not pay from my 20,000 again 3,051 for your delay. In that case, what will be the value? It will be 20,000 the value you will apply. When will you keep the assumption? When they have not given that. If the question is already talking about how you're going to compute, then we don't have to bother at all. If the question is already giving you, then you apply that only. Now for that, since you guys have asked that, I'm going to show you an exam tip. So I want you to take a photo of this if you want to keep it with you. This is an exam tip that you apply for your exam. What is that exam tip says? In exam, how will you apply the assumption? You should apply like this. When an exam question has interest on delayed payment, check the following. What is that you have to check? Is the question specifically talking about GSTs being excluded? If not, if the question, like Suresh is asking in the chat box, no, if the question is specifically saying no, Xiaomi is going to collect extra GST, then you will apply GST on 20,000 directly. No worries. If nothing is mentioned, if not, we will assume that interest is always inclusive of GST. Then you should look at, check if the month in which interest is paid is given. In our example, I have given you that interest is paid in August, which is different from the original month of January. If that month is separately given, we have to compute value, we have to compute GST, we have to compute time of supply, due date for them separately. I have also given the document. Debit note is issued when interest on delayed payment of consideration is received by the supplier. What is the debit note? Invoice is already issued. Value or tax in the invoice is less than the actual value or tax. Supplier will issue a debit note to the recipient to increase the value or taxes. This is your understanding. Is it clear? Can I go to the next area of discussion? Can I have a thumbs up if it is clear? Okay. Look at the last clause. So we are almost finishing our discussion on 15.2. 15.2e is the last discussion that we have. What is 15.2e talks about? It talks about subsidies. Now, subsidies, not every subsidy is to be considered under 15.2e. They have given the wordings called subsidy directly linked to the price. What is a subsidy directly linked to the price? Which reduces the price of the product to the customer. Then 15.2e says subsidies can be of two types. One is a government subsidy, another one is a non-government subsidy. If it is a government subsidy, how you should treat it in GST? It can be reduced from value. If it is a non-government subsidy, it cannot be reduced from value. If it is already reduced, what you should do? Add it back to the value. This is what is the provision says. So we can simply understand summary like this. Government subsidy which are directly linked to the price. Direct subsidy given by government can be reduced from value. If it is a non-government subsidy, you cannot reduce it. If it's already reduced, I should add back to the value. Similarly, indirect subsidy, like subsidy for buying machinery and all, is not a direct subsidy on the price of the product. So subsidy I should ignore in all the computation. That's your basic understanding. Now, what I'm going to do is, I'm going to take you an example so that you understand this. Okay. Simple example. Say Ola Electric. An electric scooter, when we are buying, we might get it for a very low price. But a lot of subsidy for electric scooters are given by government. Okay. Now they have stopped, FAME 2, they are coming up with FAME 3 and all that. But for the example's sake, let's assume that Ola Electric is manufacturing an electric scooter for 2 lakh rupees. Their price is how much? 2 lakh. But government says that, see, you are helping people to, go away from all this, fossil fuel. You are helping the, environment. So government is saying that we will give a subsidy of 80,000 rupees. So every Ola scooter that is sold by Ola Electric to the customer pays only how much value? 1,20,000. But Ola Electric gets how much money? 2 lakh. How they get 2 lakh? Every time they sell a electric scooter, 80,000 rupees will be given by whom? Will be given by government to them. Are you guys understanding this? So they are giving government to, they are giving 80,000 rupees government is giving to Ola Electric. So electric at 2 lakh rupees. How much will be the value of supply? Option A, option 1, you can say 1 and 2, okay. Option 1, 2 lakh will be the value. Option 2, it will be 1,20,000 the value. Which is the correct option? Just is, where are you guys? 1 or 2? Which one is the correct answer? Is it 2 lakh rupees the value or 1,20,000 the value? It will be 1,20,000 the value. Why? Because first question we should ask, is it a government subsidy or a non-government subsidy? It's a government subsidy. Second question, is it a direct subsidy? Is it on the price of the product? Yes, it's a price on the product subsidy. Can I reduce it from the value? Yes. Right? Suppose Tamil Nadu government is giving, because in Tamil Nadu we have his huge plant that they have set up. Right? Tamil Nadu government saying that I will give 10 crore subsidy for buying plant and machinery to Ola Electric, because they have made a beautiful plant in Tamil Nadu, helping a lot of people to get the job here. Will give 10 crore rupees subsidy to buy plant and machinery inside this factory. Suppose in a month, Ola Electric has a turnover of 100 crore. Can they reduce 10 crore from the value and then pay GST only on 90 crore? Can they do that? No. Why? This is not what subsidy? Direct subsidy. Even if it is given by government, if it is not a direct subsidy, you should ignore it. You cannot reduce it from the value. Suppose Tesla. Okay, now for bad reasons, it is in a lot of controversy. Tesla is actually okay. Elon Musk, you know him, right? So Tesla is actually planning to give. They are coming into India as a CSR initiative. Every Ola Electric you buy, Tesla will give Ola Electric 10,000 rupees. So you can buy it for 1,10,000. 10,000 extra will be given by Tesla to the Ola Electric. How much will be the value of supply for Ola Electric? Will it be 1,10,000 or it will be second option 1,20,000? Second option 1,20,000. Why? Because is it a direct subsidy? Yes or no? Is it a direct subsidy? Yes, it's a direct subsidy. But is it a government subsidy or non-government subsidy? It's a non-government subsidy. Can I reduce it? No. So an NGO subsidy, a charitable institution subsidy, holding company subsidy, none of them can be reduced. So the value will remain at 1,20,000 itself. Are you guys understanding this? So we have finished 15 subsection 2. 5 cases we have looked into. To quickly recap, what are the 5 cases that we have looked into? First, clause A was taxes other than GST. Number 2, direct third-party payment by recipient on behalf of supplier in relation to supply. Number 3, clause C, incidental expenses. Clause D, interest on delayed payment of consideration. Clause E, it is subsidy from government or non-government. We have discussed these many points. Now let's look at 15.3. I told you that section 15 formula we had, right? What is that formula says? Value under section 15 is transaction value under section 15.1 plus items to be included in 15.2 minus discount under section 15.3. Right? We have looked into 15.1, we have looked into 15.2, now we have to look at 15.3. Can discount be reduced from value and then pay GST on the net value? Yes. Discount should be something that you are not collecting, right? You should be able to reduce it from the value. But 15.3 says, I want to be very careful about what discount you are giving. Question is it a discount that is given on or before the time of supply? Or is it a discount that is given after the time of supply? If it is the discount that is given on or before the time of supply, which means you have not prepared the bill. If you are giving discount on or before the time of supply, show it in the invoice, you can reduce it from the value. Okay, so that is what is clause A. It is given on or before the time of supply, it can be reduced from value provided separately recorded in the invoice. Clause B, what it says, discount given after the time of supply. After the product is sold, no, then you gave a discount. Why would somebody give a discount after the supply is over? Maybe a discount for cash payment. Say, I told them to make a payment within so many time. Okay, within 10 days, within 30 days, within 40 days, I am asking them to make the payment. That discount would be called as discount given after the time of supply. Can that also be reduced from value? Yes, that can also be reduced from value. Provided how many conditions are to be satisfied? 3 conditions are to be satisfied. Number 1, this discount existed at the time of supply as per the agreement. Number 2, it is specifically linked to the relevant invoice. Number 3, ITC on discount is reversed by recipient proportionately. 3 conditions are to be satisfied. Then you can reduce this discount also from the value. Are you guys understanding the structure? Okay, let's look at what is this condition. Okay, so you understood what is the first type of discount, right? A discount given in the invoice. So which means I went to a shop. They said that the product I wanted to purchase a shirt. They said 2,000 rupees. I argued and said like no, it is 1,000 rupees online. I won't pay 2,000. Then they said like 1,800. Then I said 1,400. Then finally we agreed on 1,500. They went to the software to give the bill. The product price was 2,000. They gave discount 500 rupees. 1,500 is the next value. What is the value at which I will pay GST on? 1,500 only. That is the first type of discount. Discount given on or before the time of supply. Second discount is discount given after the time of supply. If the discount is given after the time of supply, can it be reduced from value? Yes, 3 conditions to be satisfied. Number 1, that discount should be existed at the time of supply. It should be something I promised earlier. Then second, I should be able to link this discount with an invoice. I should know which invoice I gave this discount. Number 3, if the recipient has taken full ITC, reverse the ITC that is required. Are you guys understanding this? Let's look at that. I'll give you an example for this also. One quick example. Simple thing to understand, but I want to teach you a document also together with it. Look at this. You remember MyG and Xiaomi, we had a transaction where I told about interest is being paid because there is a delay of 3 days, 3 months, right? So the transaction is now slightly different. Xiaomi and MyG are doing a lot of transaction. Now Xiaomi says that MyG, you are my best retailer. And MyG is saying that you are the best wholesaler. They're thick friends. Now the transaction is happening with a different term. What is the term? When Note Redmi 12 Pro is released, the first lot of product is given by Xiaomi to MyG only. First box of product came to MyG showroom when 10th January it came. The invoice was 2 lakh, GST was 36,000. Xiaomi correctly paid 36,000 before 20th of February. Now, their term of payment is like this. Instead of asking them to pay 3 months beyond that interest and all that, they said, you make payment within 3 months, I'll give you 10,000 rupees discount. So, Xiaomi is saying that, IG, I'm going to give you a discount of 10,000 if you make the payment within 3 months. Right? But the bill was given for how much? 1,90,000 or 2 lakh itself? Initially, it was given for 2 lakh. Now, is it a conditional discount or always this discount will be there? Conditional discount. They have to make the payment within 3 months. MyG made the payment on 5th April. So, 10th January means 10th of April would be the 3 months. But MyG made the payment on 5th of April, which means MyG is eligible for a discount of 10,000. So, MyG end up paying only 1,90,000. Question is, can Xiaomi reduce this value from 2 lakh to 1,90,000? Can Xiaomi do that? Can Xiaomi do that? Then we have to understand what kind of discount is this. Is it a discount that is given at the time of supply? Is it a discount that is given after the supply? It is a discount that is given after the supply. This can be reduced only if 3 conditions are satisfied. Number 1, this discount should have been promised or existed at the time of supply. Question, was this discount existed at the time of supply? What is the discount that is, is that discount existed at the time of supply? Yes, because the agreement says that at the time of supply itself, they're saying that I will give you this discount. Understanding? So that first condition is satisfied. Second, am I able to identify this discount against an invoice? What is the second condition? Specifically linked to an invoice. Is it linked to an invoice? Yes, that is also satisfied. What is the third condition? Reversal of ITC if MyG has taken ITC on the full value, which means in January when Xiaomi gave the bill of 2 lakh, MyG has taken an ITC of 36,000 only. Now Xiaomi is saying that my value has to be from 2 lakh to 1 lakh 90,000. 1 lakh 90,000 into 18% is how much? Can you do tuck in your calculator and then tell me? How much is that? It is 34,200 rupees, right? So ideally, MyG should take ITC of how much only? 34,200. But MyG has taken ITC of how much? 36,000 in January. So how much ITC MyG has to reverse? 36,000 minus 34,200, which is how much? 1,800 rupees, which is 10,000 rupees into 18%. So the on the discount value, how much GST that is there, that needs to be reversed by MyG, then only Xiaomi can reduce the value. So government says that I can give you double benefits. Hey, I reduced your value, ask Xiaomi that Xiaomi, you can adjust 1,800 you paid extra, no? I will reverse it to you. Now MyG is saying that no, I'll take 36,000 only as credit. Is that possible? Not possible. So they should take ITC of only 34,200. So third condition they put saying, what is the third condition they have put? Third condition they put saying, ITC on the discount is reversed by recipient proportionately. Okay, if they have taken ITC on the full 36,000, 1,800 they have to reverse. Now how will they do it in documents? Let's try to understand the document also. What is the document that will be issued? So initially Xiaomi has given a tax invoice for how much? 2 lakh plus 36,000. Can they give, now they want to reduce 10,000. Can they give a negative invoice? No. What is the document? Can you tell me in the chat box what document it will be? Everyone, what document it will be? Credit note. So we have learned two documents also. To increase the value, what document was there? Debit note. To reduce the value, what document is there? Credit note. So they can ask you a question connecting these two. So to increase, so somewhere you should remember this, to increase the value of tax, debit note. To reduce the value of tax, credit note. Why to reduce the value of tax here? They have given a discount after the supply. If the discount was given at the time of supply or before the supply, do I require a credit note to do this? No. I can show it in the invoice itself. Now here I have already issued the invoice. So I will adjust it by a credit note. So Xiaomi will issue a credit note for 10,000 plus GST, 1,800. So 11,800 credit note will be given. What MyG will do after getting the credit note, 1,800 would be reversed. Are you guys understanding this? Is it clear? Okay. So we have finished what and what? We have finished already. We finished 15.1, 15.2, 15.3. Done. All our discussion on this is over. So yes, that should be a moment to clap around and say that, okay, we have learned value of supply chapter. So one independent area is over. Some circulars for us to discuss, but the clapping will not get marks, no? We will have to solve question, no? So our complete clap would be when you get the answer for a question correct. So shall we try one question? I said I will do one question in each of the categories. So we are now going to attempt a question on what is your net or what is your taxable value of supply, that kind of a question. So I'm going to take a question. This question might not be there in ICA material, I'm not very sure, but you look at the screen and then try to solve this. Shall we try that? Okay, so you can just mark this question like, okay, so one set of discussion is over, my computation is also over, likewise we can mark. So we can do one question. I'll show you the question bank, then we will start. So question also, what you do is that you take, I'll take a small question so that you can, it'll be something that you can take a photo of and then keep it with you and then solve it for you. We'll take this question. Question 13. We will read the question, then I'll give you a time to take a photo. Okay. So first we will read. Hangover Limited Delhi, a registered supplier, is manufacturing taxable goods. Okay, so we know the company's name. So now we will keep the relevant area on the screen. It provides following details of taxable interstate supply made by it during the month of March. List price of taxable goods supplied interstate is 24 lakh. Subsidy received from central government for supply of taxable goods to government school exclusively related to supply of goods included at serial number 1 is 3,36,000. Subsidy received from NGO for supply of taxable goods to an old age home exclusively related to the supply of goods included in serial number 1 is 80,000. Tax levied by municipal authorities 32,000. Packing charges is 24,000. Late fee paid by recipient for of supply of delayed payment of consideration. Recipient has agreed to pay 9,600 in lump sum. No additional amount is payable by him as 9,600. The list price of the goods is net of 2 subsidies received. These small things are very important. Huh? However, other charges, taxes, fee are charged to the customer over and above the list price. Calculate the total value of taxable supply made by Hangover Limited during the month of March. Rate of IGST is 18%. So how do you solve this? Okay, I'm going to guide you through solving this. So you should have, there are multiple ways in which we can represent this, but I want to give you presentation also. So every computational question should have a heading. What will be the heading? So start writing, everyone start writing this answer. Let's quickly scribble and then finish this answer. It will be computation of, what is that the question is asking you to compute? Value of taxable supplies made by, computation of value of taxable supply made by Hangover Limited. This will be your heading. This will be a heading. Computation of value of taxable supplies made by Hangover Limited. For March. For the month of March. For March you can write. The question is specifically asking you. So whatever you're computing will be from the question. Now how many column table you want to prepare? 2 columns are enough. Particulars and amount. Okay. So particulars and amount. That is your column structure. So there are 2 ways in which we can solve this. Every time you include something into value or exclude something from value, you can actually write a separate working note after completing the table. That is one method. Or in the particulars column itself, you can put the reason why you have computed that as this value. So I will do it in the method in which we are, we are putting the answers in the particulars column itself. I'll give you the section number. You should ideally write it in full. That is how we will solve it. Okay. So each item from particulars we will rewrite as a representational item. First one. What is that they have written? First item. How much they collected from the customer? List price. Did I tell you something about list price? Yes, list price, the moment I see it, is nothing but transaction value. Should I include it in the value? Yes. So you in particulars column, point number 1 would be list price. In amount column, 24 lakh. Which section should I refer here? 15 subsection 1. Okay, so in bracket you write 15 subsection 1. In particulars column, you write 15 subsection 1. But in examination, don't write 15.1 alone. You should write as per section 15.1, transaction value is the price paid or payable for the supply. That is how you will write the full sentence. As per 15.1, transaction value is price paid or payable for the supply. You should write it in full. Okay, so for here, I'm just giving you the reference. You should write the entire section later there. Then point number 2, what is second one? Subsidies received from central government. Okay, central government is giving a subsidy. Next question. So it's a government subsidy. Next question is it a direct subsidy? Can you make some understanding from your from what is there in the question? Is it a direct subsidy? Yes or no? Yes. Why it is a direct subsidy? Because the question says exclusively related to the supply in serial number 1. So it's a direct subsidy. If the direct subsidy is given by government, can I reduce it from the value? Yes or no? government subsidy, direct subsidy can be reduced from value. Then, should I reduce it from the value here? No. Why? Because there is a note that you can see here, this note that you can read here. It says the price of 24 lakh is after net of 2 subsidies received. They've already reduced the subsidy. So should I reduce it again? No. So I'll just ignore it. So I'll write subsidy from central government in point number 2, amount column dash. In bracket, what is the section that I should refer? 15 to E, small letter E, 15 subsection 2, close E, in bracket. So when you write expand it, when you write it in your examination, you should write as per 15(2)(e), direct subsidy from government can be reduced from value. Likewise, you should write it in full. Then, next, subsidy from NGO. What is an NGO? Non-government organization. In particulars column, you write point number 3, subsidy from NGO. Next question. Is it a direct subsidy? Yes or no? What is that the sentence says? Is that subsidy relating to the first product price? Yes. In bracket, what is that they have written? Exclusively related to the supply of goods included in serial number 1. What that sentence means? It's a direct subsidy. Next question. Is it a government subsidy or non-government subsidy? Non-government subsidy. Can I reduce it from the value? No, I cannot reduce it. But did I already reduce it? Yes. What should I do now? Add it back to the value. So you write it in the amount column, 80,000. What is the section that you will refer for this? Same section, 15(2)(e). Point number 4. In particulars column, point number 4. What is it? Taxes levied by municipal authority. What did I teach you as an example for taxes? 3 of them. Municipal taxes, is it to be included in value? Yes. Taxes other than GST should be included. So point number 4, municipal taxes or taxes levied by municipal authority, amount column, 32,000. Write it there. Then, point number 5, packing charges. Should I include it in value? Packing charges. Which section? Which section is talking about packing charges? I given you an example for packing charge also in somewhere. Close C, incidental expense. Brilliant, guys. Super. Incidental expenses. So packing charges, should I include it? Yes. In amount column, I'll write 24,000. In bracket, what close I will write? 15 subsection 2, close C. For municipal taxes, which is the close I have to write? 15(2)(a). Correct. 15(2)(a). And packing charges would be 15(2)(c). Incidental expense. When in the examination, you should write it in full. Incidental expenses incurred by the supplier in relation to supply till the goods are ready for delivery and charged from the recipient should be added to the value. That's a full sentence. Right. Come like automatically. Then next is late fee. Point number 6, late fee. In particulars column, you write point number 6, late fee. Okay, stop there and then discuss this. Should I include late fee into the value? Yes. Which clause is talking about late fee? Clause D. Perfect. 15(2)(d) in bracket. Late fee 15(2)(d) in bracket. Now, should I include 9,600 into the value? No, I should look at the examination tip that I have given you. The examination tip I said, what is our assumption? The question, if it's not talking specifically anything about whether it is including, not including, we will make an assumption that it is inclusive. If this question is giving you that it is inclusive, what is that they have mentioned in the bracket? Look at the sentence that they have given here. What it says? Recipient has agreed to pay 9,600 in lump sum. Lump sum means what? In total. They are not paying any GST extra. So what is the value that I should do? What is the formula that I have to apply? Take your calculator. 9,600 multiply with 100 divided by 100 plus GST rate. What is the GST rate given in the question? 18%. So how much will be the formula? 9,600 into 100 divided by 118. What is the amount that you've got? 8,136. This is what you should add it to the value. In the amount column, you should do 8,136. Can someone pick the mic and tell me the total value? So your particulars column, put an underline and then write total taxable value, or do all the tuck and then tell me the total taxable values. Someone take the mic and then tell me the value. I'll tell you the value. I can see from online, people have already computed. Did you get 25,44,136? Yes, that's the value. Are you guys understanding how to solve this kind of question? Is it clear? Now we can do one more clap. So we are now done with questions also. So we can clap for ourselves. So we have finished one type of question, which is computation of taxable value of supply, right? Now, few circulars for us to touch upon. Some small circulars that we have to understand to close this area of discussion and then move to the next discussion, which is charge. We will discuss few circulars that I want to discuss quickly. Your ICA material, in your value of supply chapter, you would find a circular called sales promotion schemes. If you are looking at ICA material, if you are looking at my material also, you will find it here. They just clarified how discounts will be generally used for improving sales. As a sales promotion methods, sometimes discounts are being used. There are two types of discount that I'm putting across here. One is a volume based discount, another one is post supply discount. Sales promotion in the sense to improve sales. There are multiple methods they'll help you to improve sales. No, so one such method would be what? Discount. I am somebody who's generally caught by this method. I purchase a lot of item because there is discount. On a daily basis, I am getting fooled by all the companies. I'll tell you a few companies. So look at, they're talking about two type of discount. One is a volume based discount. In that itself, they're talking about two type of discount. One is buy more, save more. Another one is discount upon achieving volume targets periodically. What is buy more, save more? Daily, I go to Swiggy and I'll start adding something on Instamart, or I'm starting adding something on food. Before I go and then pay, the Swiggy will tell me buy for 50 rupees more to get a discount of some 20%. I don't need that extra item, but I'll go and add. Buy because I want the discount. Buy more to save more. This is the discount, right? So if you go to Ajio or Myntra or any website, they do this. You go to a shopping mall, they'll say that buy one item, get 10% off. Buy two items, let's get 20% off. Buy for 10,000, get a 750 off. Then you would have bought for 8,000. You'll still buy some nonsense item you don't want, you will buy extra. This is called buy more, save more. Is there a discount that is given at the time of supply or after the supply? It is a discount that is given at the time of supply. So the circular says only what you already understood. They're saying buy more, save more is given at the time of supply. And is it shown in the invoice? Yes. Can it be reduced from the value? Yes, under 15.3a. It is a discount that is given at the time of supply. Show it in the invoice and reduce it. So if you are getting an item, say 20% off or buying two items, two item value minus 20%, they'll give you the bill. GST is payable on the net value. Discount upon achieving volume targets periodically. They're saying that there are some discount generally between manufacturer, distributor, or wholesaler, retailer. They would say, I'll give you a discount if you reach a target of certain items, right? Say 1% discount once stock reaches 10,000 kg. Say Xiaomi is telling MyG that, MyG, last year you sold 800 phones of Xiaomi. Next year you sell 1,000. I'll give you 1% extra discount on all the item that you sell. So in 2025 calendar year, suppose Xiaomi wholesaler told to MyG or Sangeeta Mobiles that you sell 1,000 of my product, I'll give you 1% extra discount. They reach this 1,000 only by October. So they're getting discount from January to October in October. Are you guys understanding? After you reach a target, you get discount for every item they sold so far. Question, this is called as discount upon achieving a target. Next question would be, is it a discount that is given at the time of supply or after the supply? For January item I sold, I get discount in January or in October? In October, when I reach 1000 item. So is it a discount that is given at the time of supply or after the supply? Is a discount that is given after the supply. Then next question, if the discount is given after the supply, can I show it in the invoice or I will do it through credit note? I will do it through credit note. So this is a discount that is given through credit note. The next question would be, can I reduce it from the value? If the discount is given after the supply, three conditions are to be satisfied for you to reduce the discount. One, it should be existed at the time of supply. Number two, should be linked to an invoice. Number three, proportionate reversal of ITC. The circular says all these discounts which are upon target is generally agreed upfront. So they clarified that generally agreed upfront, but you can reduce it from the value. Only other two conditions are also to be satisfied. It can be reduced from value provided other conditions are satisfied. What are the other two conditions? Should be linked to an invoice. Number three, proportionate reversal of ITC. Then another discount they're talking about is post supply discount. What is a post supply discount? You're getting a discount after stock is being unsold for a long time. They're saying that discount given after the post supply discounts are discount that is not agreed upfront. So there is a product that is not sold for a very long time. So there is a discount that is given which is not agreed. Those discounts are called as post supply discount. Discount given after the supply, generally not existed at the time of supply. Credit note might be issued as a commercial document. It cannot be reduced from value since condition under 15(3)(b) is not satisfied. I'll give you a small example because sometimes this particular area alone gets slightly confusing for people. Look at this. Bakery house is a manufacturer of bread packets. Bakery house is selling bread packets to small bakeries. Manufacturer too. So you've seen bread packets like Modern Bakery and all that. You go to supermarket also, you'll find one bread packet which will be of a brand. So that brand is selling bread packets to multiple dealers. This bakery house is selling bread packets for 30 rupees minus 5 rupees discount to all the dealers. 25 rupees they're selling. Dealer 1, dealer 2, dealer 3. 3 dealers are dealing with them. Dealer 1, dealer 2 fully sold this item. For dealer 3, what happened is dealer 3 is actually could not sell this entire stock. Okay, after 1 week also they are not able to finish off the stock. Now bakery house is worried. Why? It is an item which will go expired. Bread will expire now after 1 week. You cannot sell it. So bakery house, what they did? They took the phone, gave a call, told third bakery, A bakery, I will give you an additional 5 rupees discount. You do some kind of a discount to your customer and finish it off. I don't want my item to be expired. Now the third bakery decided to give some discount to the customer and then sold it off. While paying this money to the bakery house, how much money will be paid by third bakery to bakery house? 25 rupees or only 20 rupees? How much will be paid? Only 20 rupees. My question is, what will be the value of supply for bakery house? Will it be 25 or 20? We have to analyze whether this discount is a discount that is given at the time of supply or after the supply. This is a discount that is given at the time of supply or after the supply. It is after the supply. When this discount was thought about, only when the product were unsold. This is called as a post-supply discount. This discount is given after the supply. If the discount is given after the supply, when can I reduce this discount from the value? How many conditions are to be satisfied for this discount to be reduced from value? 3 conditions are to be satisfied. What are the 3 conditions? It should be existed at the time of supply, invoice linking, and reversal of ITC. Is that first condition satisfied here? Is this discount existed at the time of supply? No. So can it be reduced from value or it cannot be reduced from value? It cannot be reduced from value. That is the clarification. Look at it. Post supply discount. Example, discount upon stock being unsold for a long time. It is a discount given after the supply, generally not existed at the time of supply. Credit note might be issued as a commercial document. It cannot be reduced from value. Why this credit note as a commercial document wording is given? That is what is our discussion. Look at it. Here, bakery house will get how much amount? How much value was given in the invoice when bakery house was selling the product? How much was given in the invoice? How much amount was given in the invoice? 25 or 20? 25, because at that time they sold for 25. Then while paying, how much was paid by the third bakery? 25 or 20? Only 20. Is 5 rupees still payable or never payable? Never payable, because the discount is given. But for value of supply, for GST, can I reduce this 5 rupees from the value? No. So how will you adjust this in accounting? In the books of accounts of bakery house, can I show that I still have this amount payable? In third bakeries payable account, should 5 rupees be still payable? No. In bakery house, receivable account, should 5 rupees be still receivable? No. How will I adjust this? I need a credit note. But can I issue a GST credit note? No. GST credit note can be issued only if you can reduce the value. So that credit note will be called as an accounting credit note or commercial credit note. So just because you issued a credit note, can I reduce the value? No. That is what is the clarification they have given in the circular. What is the meaning of it? The circular says that you cannot, just because you issued a credit note, you cannot reduce the value. To reduce the value, how many conditions are to be satisfied? 3 conditions are to be satisfied. What are the 3 conditions? 1, the discount should be existed at the time of supply. Number 2, specifically linked to the invoice. Number 3, ITC to be reversed. In this case, it is never existed, so you cannot reduce it from the value. Credit note here will be only called as what credit note? Commercial credit note. Is it clear? Is the circular clear to all of you? Is it clear? Okay. There's a circular on EMI transactions. Okay, so there's a good question that was asked by Gokul. Does the shop number 3 still need to reverse ITC, or is it not necessary? Not necessary. Why? Because the value remains. They paid the taxes now, so they don't need to reverse the ITC. I'll give you an example to understand the EMI transaction. See, there are 2 types of EMI transactions that they are clarifying here. Okay, just you understand. There is no need to copy. Also, you will totally understand this. It's a very small concept that they are putting across. Say, Sangeeta Mobiles or MyG Mobiles. It's a retail showroom, right? Today, if you go and then ask them that I want to buy an iPhone, they'll all say that you have 2 options. Either pay 80,000 rupees and buy an iPhone, where the value would be 80,000, or you can pay this 80,000 in multiple installments, equal monthly installments, EMI scheme, right? So they would say that you can pay this amount in installments. What installments they're saying? IG is saying that you can pay this in 8 installments, but you don't pay 10,000 each in 8 installment. You have to pay 11,000. Why? There's an interest that is collected extra because you're paying as a equal monthly installments. So there is a delay in making the payment. So I'm collecting interest. So you end up paying totally 88,000 if you're paying delayed. How much will be the value if you're purchasing a mobile phone on EMI from a MyG Mobiles? Will it be 80,000 or will it be 88,000? Should this 8,000 be included in value as per 15(2)(d) is the question. Should it be included in value? The answer is yes, because 15(2)(d) says it's an interest on delayed payment of consideration. Are you guys understanding this? Normal delayed payment interest only, they are collecting for EMI also, it will be included in value. Value would be 88,000. But the real check is on the second transaction. Normally, if you go to Sangeeta Mobiles, do you have this option to pay on EMI provided by Sangeeta Mobiles? No. Practically, what happens? Sangeeta Mobiles would have made a tie-up with HDFC or Bajaj Finserv. Have you heard of this company called Bajaj Finserv? Yeah, what did they do? You go to this Sangeeta Mobiles or you go to Vivek's, and then there's one guy with Bajaj Finserv sitting there. So Vivek's or Sangeeta Mobiles or Vasant and company, they're telling this that, see, you have 2 options. One, you can get the product and you can pay 80,000. Then value would be 80,000. Or you can go avail the EMI option I have with Bajaj Finserv. So the Bajaj Finserv will provide you EMI facility wherein you have to pay. So you can get the product now, you have to pay EMI to Bajaj Finserv. In that, what is that back end happening? How can you pay money to Bajaj Finserv and get a product from MyG or Vivek's or Vasant and Company? What happens? When you avail the option of EMI from Bajaj Finserv is paying this 80,000 rupees upfront to MyG. My question is, what is the value of supply for MyG in that case? Will it be 88,000 or 80,000? 80,000 only. Then Bajaj Finserv will collect how much money from the customer? Customer Mr. Raju will pay 80,000 or 88,000 to Bajaj Finserv? 88,000. Now my question is, there is an extra 8,000 that is going into the pocket of Bajaj Finserv. Should this 8,000 be included in the value of supply of MyG? Should it be included? No, this amount is not even collected by MyG. Then what is this interest all about? This interest will not be considered under 15(2)(d). Rather, this is an interest on loan facility, because the one who's giving you the product is not collecting the interest, a third party is collecting the interest. Then this interest would be treated as interest on loan facility. So Bajaj Finserv is providing you a service of providing you a loan, and you are paying 8,000 rupees interest. This interest would be covered under exemption notification, which says that there is an exemption notification which says the wordings in exemption goes like this: service by way of accepting deposit or extending loans or advances insofar as the consideration is represented by way of interest or discount is exempt from GST. Accepting deposit, extending loans or advances, if somebody is giving you loans or advances and you pay a consideration called as interest, no GST on that, it will be that interest. But in the previous case, will it be an interest on loan? No. When MyG itself is collecting interest, it will be interest on delayed payment of consideration. Both are different. Are you guys understanding? When it is a loan interest, it will be exempted. When it's an interest on delayed payment of consideration, will be added to the value. Is this clear to all of you? Can I have a thumbs up for that? Okay, perfect. So that means what? We have concluded our discussion on value of supply chapter. So we are fully done with it. Okay. So now we will take a break. When we come back, we are going to get into charge chapter and then play with exemption, composition, levy scheme, all that we're going to do. So are you understanding this? Can I have one huge thumbs up? Is the online thing working for you? Okay, perfect.